welcome. This is my trade review of October 20th, Friday. I'm going to start by reviewing my 4 trades of the day, as well as what the best setups on the SPY were, according to my own analysis and system. So let's start off by going over this first trade here. This is really not great. It was one of those days where there was this initial sort of controlled buying here, bear flag, this tapered channel that came in and it broke, retest, formed that right shoulder, like so. And it's one of those moves that's like, well, if you miss this, it's very difficult to get in anywhere around here. So I definitely was kind of like, oh, man, missed it, blah, blah, blah. And I was just sitting there. I wasn't feeling all that much FOMO. I think I was more just bored. More so than anything, I was more, just itching to get into a trade. And I was looking around. I'm not staring at the charts constantly, but I was on Discord chatting, and I remember saying to myself, this yellow algo is quite tight. So you're not going to be going long until you see a break of this of this teal here, grabbing this liquidity here on the breakout, or a break here, a retest, some sort of microstructures. That's the criterion to go long, right? Not whatever I had. And oh shoot, I deleted it. Anyways, I'm sorry, but you can probably just go back. But the idea was that I was not prepared enough. I was not planning enough. And the thing is, I had my actual setups. I had where I wanted to go long. I had where I wanted to go short. However, I hadn't clearly defined well enough where I wanted to do that. What are the exact conditions? I think that's what I have to change, is that, sure, I can make these plans. I can, provide the analysis. But what are the actual, systemic, actionable entry criteria? And I think that's where I'm failing with this, is that I'm just kind of looking at the chart, and look, there's this impulsive side, of course. That's obviously a huge part of it, where I just look at the chart, I looked at the chart for a split second, and I was like, oh, okay, time to get in. And it didn't meet any of the criteria, it didn't meet any of my analysis, and I just wanted to get in because I was like, oh, I just wanted to gamble, I just wanted to get in, I just wanted to trade. And I think, look, I can speak for the rest of my life about impulsive or rush trading, but I think to stop it, in the same way that I have formed rules to say, okay, well, if this happens, then I have to take a 10-minute break, or I have to go through this routine every single morning. I have to do this many push-ups, or this many sit-ups, or I have to drink water, or I have to listen to this song, or I have to meditate and close my eyes for this amount of time. And that actually lays down a very specific set of goals and ideas that need to be followed day in and day out. And look, I can draw the lines on the chart. I can circle where the actual good setups are, where the right shoulder needs to be, where the liquidity is. But I think for me and my personality, unless I'm actually detailing very in depth and clearly, hey, this and this, this break of this algo lining up with this liquidity level, and only if this happens, then you can actually begin to enter and look at those setups and wait for those retracements or breaks. I think I need to be more clear in defining what my system actually is, because it's one thing to actually analyze, and it's another thing to take that analysis and put into a trade. And that's where I'm struggling so much. And I think that's also why I take those trades. That trade was just ridiculous. It was just impulsive. It was just see a green candle, chase a green candle, lotoing, high of day, V reversal, and that's not how you want to be trading, of course. And I think I do that because I lack a system. I lack the ability to actually take my analysis and my understanding of charts and algos and structures and price action and actually turn it into something where I can say, like a playbook, right? If this happens with this and this lines up here, then I have the green light to enter here. And treating that in very strict terms in very rule-based and systemic and mechanical terms is what's going to make me a better trader. Not spending more time analyzing and analyzing and analyzing. It's about actually codifying and redirecting that analysis into a plan, an actionable and repeatable plan. It's like Lance Brightstein or whatever his name is, right? The guy is a legendary 8-figure trader for SMB and all this stuff, and he says, I mean, I think like first year was just losing month, losing month, losing month, losing month, and he was studying all this stuff, working super hard, but he said that what helped him so much was creating a playbook, right? Like how a football team would say, okay, these are the setups, these are the plays. If this person moves here and that quarterback or whatever line guy goes there, then you do X, right? If Y, then C, then you execute, W, right? And that's sort of what I have to do. I see the setups, I see them, but I just can't trade them. I don't know, and I think like there's also just this emotional side too, where I'm like, oh, I just want to get in. So yeah, I'll talk about that more maybe at the end of the video. Um, more of my own personal reflections because it is something I'm struggling with. I mean, I am truly a struggling, um, consistently unprofitable day trader. And it's something everybody goes through. I'm not expecting to get this in. I'm not expecting to be like Eric in a few months. Uh, but it's also like, man, I really have to get used to losing a lot and a lot and a lot. Um, I was actually just listening to a talk from someone. His name is Brian Lee, and he was a professional gamer before trading, and it was it was his first video, and now he's very successful. He's wildly successful. But he was talking about how he had experienced such a difficult point around like a year and a half, 2 years into his trading career where he lost basically his entire account and like everything just wiped out in a very brief period of time. And he was just talking about the recovery process of how he had to change things. And I mean that's not me, but I feel like I am in a bit of a recovery process with how I need to change things with my trading itself. Less so the emotional aspect, less so the psychological, personal aspect, and more so how do I control and systemize and make my analysis more objective. I'm just trying to do discretionary trading, and my I'm too new to be purely trading on a discretionary level, right? So yeah, well, I may go back to that later, but anyways, next. So this is kind of just a bear flag here, controlled buying. This left shoulder liquidity here, grabbed it. Really nothing special. Just took the trade. The next setup was we're two of the same similar style trades in this like very tight range. As we come up here, this resistance, right, forming at this white line, and we broke out. And this move is quite strong. I mean, look at the volume here, and then the lower bear volume. So the bulls were clearly here after these two strong legs, and it's like, where is the actual liquidity being grabbed? There's no, like, when I'm shorting here, this has already all been wiped out. Up, down, right? And this is just like very choppy, very like rangy, aggressive trending in both directions. And when you're entering here, like myself, because I see, head and shoulder, whatever it is, when you enter there, you enter right in the middle of this range where the market is, up, down, and grabbing all this liquidity, whatever. So this is more so when you want to stay out. Sure, there's the controlled yellow buying and the right shoulder, but the setup is one thing, but the context in which the setup is taking place is completely another thing. And this context here is horrible for my style of trading and for this kinds of trades because I'm trading literally in the middle. So look, and it broke out of this major magenta buying as well. So there was clearly strength there. I'm just shorting right here, and look how aggressive that stop out is. So the other trade was this move here when we broke out of red, the red buying, and my entry was just bad. My entry was just very bad, and I stopped myself earlier than I should have. If I buy here, then my stop needs to be below this candle, right? Below the strong there. However, I bought like up here, and it just retraced a little bit, and the slippage was too much, and I just was upset with the entry. I was like, oh, just chasing or to the top of range with this resistance, and I already was down in the day, and I was just like, oh, just cut the pain, right? Just get me out. And look, man, it immediately reversed, and it went pretty nicely into profit. But then again, this is back to that previous trade, right? Where we're still in the same up, down, like chop zone, right? Where there's no liquidity and the market is just kind of playing around, pulling out stops. So if I wanted to, like in hindsight, right, where is the best entry? Either the moment this green candle goes above this wick, and I have this sort of right shoulder here that forms it with the stop there. But like even still, this is a one candle left shoulder, and all of this liquidity here has already been boom up to the upside, to the downside. It's already been played with, and the market is just ranging, and I'm logging right at the top, right of this range here, and either that or I just buy where I bought, and I respect my original stop. I respect it, but I was like, just cut it out, and then I was done, right? So long inverse head and shoulders, stopped way earlier than I should have. Don't like how I entered. Wanted to wait for the retest. The other thing is this breakout here. I was just buying, hoping we would go, straight up like that, right? But really, I wanted to wait because this is just so choppy, and you want to clear entry. So I wanted to wait for this breakout to come, like we did on that green candle, and then we retest, which we did on that red candle, and then we continue forward, right? So there's that break, that wick comes down, and that's where I got stopped out. That should have been my entry. That should have been where I was entering here with a stop right below that level, and then we fly. But yeah. So let's go over the day itself, these setups. It's one of those days where right on the open here, there was this channel, and like I noted in the first, like right at the beginning of the video, it's a move that unfortunately, if you weren't able to catch pretty early on, there was not a whole lot of places for you to get in later, right? So you kind of just have to sit and watch head, left shoulder, right off the beginning, tight range, strong bear bar breaking us out of range, good volume, and then that continuation below. And we channeled down beautifully in this red. Then you notice the tapering to orange, and we build this liquidity here, and that's actually what I want to talk about, is that on this channel break right here, right, you're grabbing this zone is being grabbed when the market moves and breaks out of here, right? So all of this liquidity here was built on the tapering from red to orange, right? Was built so that when this comes in, then it sweeps it to the upside and to the downside. And that's a great setup because you have the tapering from red to orange, and then you have this inverse head and shoulders forming here, and then you have the strong close, this bar closing well above the well above the orange, and you have a nice continuation higher. And then this actually ends up forming a really beautiful 61.8 golden pocket Fibonacci retracement, right? Right there. So this is just, all of this is just controlled buying, liquidity building, right? But you don't 100% know this yet. And when the chart breaks out and it immediately, gets engulfed, rejects down, and then we start channeling up, and this looks fairly controlled. Although there's still some strength here, like strong bull bars, but then good amount of rejection, and then you have this liquidity here at the bottom that forms on the right shoulder. Sorry, on the left shoulder. And this head forms with an engulfing candle, right, where the bull bar gets immediately engulfed, reversed by the bear, forming that hammer doji, right? So reversing, that's the head. So the head forms there with the left shoulder liquidity here, right? Beautiful. And then right on the break of that controlled buying channel. And that's a good move. I mean, it's like an 8-9 point move. So that's another thing you could have been looking out for. And especially with this liquidity that had built here, feeding the fire, right? Feeling this move. So left shoulder head with this hammer doji rejection, right shoulder. But then we continue within this, this clearly defined yellow, controlled buying, controlled buying, controlled buying, and we form that much larger head and shoulder. Right head, left shoulder here, and the right shoulder forms right here on the break of that yellow, this yellow controlled buying, and that could have taken you down to the low of day. Although look how choppy this is. The market was definitely fighting. So the whole day, right? Strong bear leg, bull flag, head and shoulder, break us down. So, yeah. I still feel like I want to talk about creating that playbook. What is that going to look like for me? And I'm going to update on that in the coming days. Of like, what does an actual A+ setup look like? Like, I can feel it. In the sense that, like, if I can see it, then I know what it is. But I actually haven't taken the time to write it down, to actually study it and systemize it and create a strict set of rules and criteria to apply to those A+ setups. And I think that's where I'm failing. I was looking back at my old trades from like May and June. Dude, I was killing it. I don't know what happened. I was so consistently taking like 3 out of 3, 3 out of 4 days of green. And I can't even get 2 trades in a row green. And it's my analysis is better. My understanding of liquidity is better. However, then I was executing on such a simple level. I was trading in a way that was so straightforward and relaxed. And look, now I have the ability to analyze the market and take significantly higher quality trades. But that's so often clouded by the fact that I'm not following that analysis, that I don't know how to actually take that analysis and create a plan. That's the issue. So that's what I'm going to fix. Yeah, thank you for watching.